For those of you that don't know, I recently just closed on my first investment property, and I wanted to make this video to share my experience with you guys and also kind of fill you in on some of the directional changes that I had along the way. I was born and raised in San Diego, California, and I still live here today. For those of you that don't know, home prices in San Diego are some of the highest in the country, so unless you have an extremely high income or a large down payment, it's going to be really hard for the average beginning investor to even get their foot in the door here. Also, unless you're able to run a highly successful Airbnb or buy like a large multifamily building, your chances of being able to break even on a month to month basis are pretty slim here. If you guys have done any research at all on real estate investing, then I'm sure you're familiar with the term cash flow, but if you're not, let me explain. Cash flow is basically the money that you're left over with at the end of every month after all the expenses of owning that property are paid for that month. Think income being rent minus expenses such as principal, interest, property taxes, home insurance, and stuff like that. Finding positive cash flow in San Diego and many other cities in California is really difficult in today's market. Once I came to terms with that fact, I realized that in order to get my foot in the door, I would need to start with an out-of-state investment property for my first purchase. When looking at the whole United States, trying to find the right city and state to invest in was definitely overwhelming at first. The only place I could really think to start was naturally by Googling and watching YouTube videos on the best cities in the US to invest in real estate. Somewhere along this process, a friend of mine recommended that I check out this real estate brokerage that's niche was basically finding people vacation rentals or Airbnb style investment properties that were mostly out of state for the clients that were buying. Their business model was essentially if you buy with one of their agents in one of the markets that they operate in, they'll pretty much provide you with a free course and continued education on how to manage that property remotely. By this time, I was definitely getting pretty interested in going with an Airbnb or vacation rental style property because the earning potential on those investments is usually a lot higher on a month to month basis than, say, a traditional rental property. So I went ahead and got pre-qualified with their preferred lender, only to realize that the amount I qualified for, I was really looking at the bottom of the barrel sort of properties they were offering. A lot of their markets were really expensive and just mostly out of my price range. So unfortunately that kind of obviously deterred me from working with this specific brokerage. Once my focus had shifted to vacation rentals, my mind naturally started wandering to Big Bear Lake, California. Big Bear is a popular ski resort town that's about 2 hours away from San Diego, and it also experiences pretty heavy traffic from people all over Southern California. Me and a lot of my friends and people I know have been frequent visitors to Big Bear over the years, so also the idea of maybe being able to use my own vacation rental for my own pleasure and have it be an investment that brings in cash was really exciting. After speaking with some realtors and lenders in the area, I came up with a few concerns about this particular market. First, the houses I qualified for were in less ideal parts of town when it comes to where visitors are ideally going to be wanting to stay on their visits. Also, not unlike the rest of the United States, the area had seen pretty ridiculous price appreciation over the past couple of years, and there was also super limited inventory, so it was just definitely a difficult time to be a buyer in that market. This market is also really seasonal, so I was a little bit concerned that it would be hard to keep it rented in the off-peak seasons being spring and fall. Based on my research, if I purchased something in an area I could afford there, I would pretty much be lucky to break even or make minimal profits on that investment. I definitely plan on owning Airbnbs in Big Bear or somewhere else at some point in my life, but for some reason my gut just told me that this might not be the right time or the right avenue to start with. Considering the complexity of getting the place furnished and managing it myself only to break even, just started shifting my focus more into the direction of just starting out with a traditional investment property for my first buy. After I determined I wanted to purchase a traditional rental for my first one, I became interested and started looking in Charlotte, North Carolina. It's a city that's been experiencing a lot of growth, and I also know some friends that grew up there and had just told me it was a really nice place to live and had only good things to say about it. Also, based on some research I did, I came to find that a lot of people claimed you could still find positive cash flow in that market, which is something I definitely was after. I also found that a lot of large hedge funds were buying up single family homes there as investments, so I figured if these huge companies with all their resources are, willing to put their money into the real estate here, there has to be good reason for that. So I got in touch with an agent there, and with their help, I started educating myself on, what the desirable parts of town were and what the not so desirable parts were. Once I started actually analyzing properties there, I came to find that I couldn't even really find anything that would break even in terms of cash flow. Homes in the nicer, more desirable parts of town would still be costing me somewhere between $200 to $400 a month, even when rented. And homes that were in more mediocre parts of town were still going to cost me somewhere from, $150 to $200 a month. So with that information, it definitely kind of turned me away from that market for the time being. So after running the numbers on 30 or so properties there, I realized that I didn't think Charlotte was the place to start. The next place I investigated was Memphis, Tennessee. A YouTuber I liked and followed was a really heavy investor in Memphis real estate and praised it as being a great cash flow market. One of the reasons Memphis is such a strong cash flow market is because its median home prices are some of the lowest in the country. Also, more than half of the residents there are renters, which keeps the, rental demand pretty high in that area. A definite drawback of Memphis, and you'll find this with a lot of other heavy cash flowing markets around the US, is that it's definitely extremely high in crime compared with a lot of other places in the United States. Despite its crime and some of the problems the city faces, it has a really strong market for blue collar jobs. It plays a huge role in shipping and distribution, also a lot of trucking companies. It's pretty diversified in its main industries, and it's definitely a lot more instrumental to the function of the US economy than many people realize. While researching Memphis, I came across a turnkey company which I became interested in working with. A turnkey company is basically a business which buys properties, restores them to move-in ready condition, and then sells them to investors. Most turnkey companies will also find tenants for you and manage those properties after you purchase them. Turnkey companies can definitely be a good option for newer investors who kind of just want to be closely walked through the experience, or they just want something that's more streamlined. It's also kind of target market, I'd say, is really busy professionals who want to diversify from the stock market, start investing in rental real estate, but they're not the type of people that have the time to find the right property, facilitate a rehab to be done on that property, and they just need a simpler, more straightforward way to get in. A definite downside to working with a turnkey company is that you're most likely going to pay retail or market value for that property, meaning you're not usually going to get a good deal on it. And many people in the real estate investing space will say that the money is in the buy. You'll hear that a lot. And what they mean by that is oftentimes one of the biggest ways you make money in real estate investing is by buying a property for less than it's worth, basically making you money instantly upon the purchase. Eager to take some action and get the ball rolling, I planned a week-long trip out to Memphis to meet with a few different turnkey companies and just drive through the different areas and neighborhoods and get an overall feel for the city. The companies I interviewed all gave me lists of different properties that were in different stages of the renovation all around the city, so I could, see their work and also just kind of, go through the areas they were operating in. In the time I was there, I got a good feel for the city. I felt pretty good about having gained a sense of what areas were on the uptrend and what areas I should maybe avoid. Although on paper, cash flow is usually higher in less desirable parts of town with cheaper purchase prices for the homes, I ultimately decided I wanted to go with something that was maybe a little bit of a safer investment in a nicer part of town where it was just a more desirable neighborhood and there was most likely the type of tenant it would attract would be more likely to take care of the property and be able to pay their rent on time. By the time I left, I had a few areas that I felt good about, and I began to watch for properties popping up in those areas when I got back home. Just a couple weeks after getting home from my trip, a property popped up in an area that I liked, so I decided to make an offer on it. This house was in a part of town that wasn't necessarily gentrified, but was definitely in an area that was considered up and coming. I also found that based on several crime stats I looked at, this area was a lot safer than other parts of the city. I hadn't seen the actual house in person, but had driven through the general area and some of its neighborhoods and felt good about it. Also, through my research, I had come to find that you can learn a lot about an area based on the businesses that are nearby. Certain restaurants, grocery stores, and businesses will only open locations in an area if they think it's either trending upwardly or is an area that's already considered safer or has been experiencing some growth. One example of a food chain like this would be Chick-fil-A. Chick-fil-A won't allow a restaurant to open somewhere unless they feel the area is safe and becoming more desirable. Other examples of this would be Chipotle and also many well-recognized grocery store chains. This method of evaluating local businesses definitely isn't a tell-all solution to finding the right location, but it definitely does give you some good insight. The property I had made an offer on was actually right down the street, walking distance from a new Chick-fil-A, an Aldi grocery store, and a Chipotle that'd be opening soon. The cash flow on this property was low but still positive. Considering all my other calculations were right and assuming I was able to rent it for the amount I thought I would be, I'd be left with about $60 at the end of every month after paying all the expenses. Many seasoned real estate investors would say that cash flowing only $60 a month is much too low, but just considering the way the market was at that time in terms of how much more expensive property had gotten, interest rates were rising and relatively high at the time, I just figured at my age, as long as the expenses are covered by the rent, I'd be happy. After all, even if you're breaking even on cash flow, and as long as you've calculated in all your, repair expenses and vacancy and stuff like that, your tenant is still essentially paying off 80% of the house for you. Eventually, the house is going to be paid off, you'll no longer have a mortgage, and you'll still be able to rent that property. Because of the competitiveness in the market, I was advised to offer more than asking price on the place if I wanted a good chance of securing it, but still having a lot of fears about whether or not this was the right decision, I just decided I'll offer asking and let's just see what happens. To my surprise, the next day I was notified that my offer was accepted. I was definitely experiencing a lot of fear in terms of whether going forward was a good decision or not. I was able to calm myself down by realizing that these fears were normal and that they should be expected anytime you're trying something new or out of your comfort zone. I also reassured myself that based on all my market research, this house was in the right location. I closed on the property on the 13th of October. The property management is still looking for a tenant, so fingers crossed they'll be able to get somebody in there soon. I do have until December 1st, until the first mortgage payment is due, but yeah, ideally, obviously, I would love to get a tenant in there so the first payment doesn't have to come out of my pocket. Being my first purchase, I'm sure I made a bunch of mistakes along this process. I'm sure I'll look back at this and maybe laugh at some of the silly mistakes I made, but I've learned a lot so far, and I know I'm going to continue to learn based on how this first purchase turns out. Whenever we're trying something new, we're bound to make mistakes, and the sooner we make those mistakes and learn from them, the sooner we're going to be able to master whatever it is we're trying to become experts in. I want to thank you all so much for watching the video. Please leave a like or a comment if you enjoyed it. I plan on continuing to make videos about real estate investing and personal finance, so please subscribe to the channel if you guys want to keep up with me on the different lessons I'm learning and just my experience as I kind of move forward at trying to master this goal. Thank you guys again for watching, and I hope you have an unexplainably magnificent day.